Bruce Sherrick. I'm a professor in the Department of Ag and Consumer Economics at the University of Illinois and the current director of the Center for Farmland Research. Much of the work that we do and much of the work that I do involves looking at things that affect farmland valuation and the returns that farmland generates. A great deal of time is actually also spent looking at the relative performance of farmland to other investments. And that's become a real interesting and growing opportunity, I think, because institutional investors are interested, high net worth individuals are interested, farmers are interested in understanding whether it makes more sense to expand or how to change their ownership. And farmland returns have been really quite remarkable. I think it's always intriguing for people to realize how large of an asset class farmland really is. It's roughly $3 trillion of assets in the sector, and $2.5 trillion of that is in farm real estate. There's still very little debt relative to the size of the asset class. So in total, USDA sources would put the total amount of debt on farmland at about 13.9 or 14%. 14% debt in an asset is generally a very low number when if you were to compare it to, say, traditional equity investments. If you were to combine all of the companies on the New York Stock Exchange onto a single balance sheet, you would have roughly 66% debt. What is also very interesting is if you look historically at the returns to agriculture, the annual income is fairly stable. The capital gains have also been relatively high for farmland through time. If you pick a 10 or a 15 or a 20-year period and move that window around however you would like in history, so as not to pick a particular period of time, but as long as the window is long enough, farmland tends to perform extremely favorably against fixed income and against equities in general. Institutional investors, therefore, have an attraction to it. Farmland also has historically shown a positive correlation with inflation. That turns out to be really critical to a long-term investor like a pension fund or someone who had long-term obligations. What will happen to agriculture over a long period of time, I feel, is fairly clear. Whichever metric you use, it's very clear that the world's population is growing, will eventually peak out, but at a much larger number than we have today. That's going to require proportionately more food, and in two ways, not just the growth in the number of people, but the change in diets people actually have. The quantity we grow, though, is dependent on another really important feature. The more money people have, the more they eat high-quality proteins and meats and calories that are not just the first base calorie from a plant. So I think the scaling up for demand for grains will come in many ways from increased livestock consumption in parts of the world where the incomes are growing to the point that people are still adding meat to their diet. Consumers have an increasing interest in knowing about how their food was produced, what the conditions were in which it was produced, what the attributes of the food are, and are willing to pay for that information. So companies have also figured out that owning technologies on the way into the farm and on the way off of the farm help communicate that message and become an important part of the value of the food system. Another feature of the role of farmland is it tends to be a great diversifier. If one is to do the study that says the optimal amount of farmland you should hold relative to the returns of other assets, you generally find that it's a much higher number than is even possible to make as an investment. I think in evaluating any change in investment, the beginning point is to look at what you currently have. A second important feature is to look at what you would like to achieve. The place to start, though, to me, is to compare the nature of the returns. The high actual total return on a long-term basis, positive correlation with inflation, and lower negative correlation with financials or equities tend to be the features of farmland investments that are very positive. What I like to do, though, in a farmer audience is quite often go around, the show of hands, who would like to sell me their farm? No one will put up their hand. Show of hands, who would like to own more farmland? And everybody puts up their hand, of course. And so as an asset class, it has those characteristics where you feel good about being a participant in the asset class. On top of that, people think that it's an avenue to have real impact on society in a positive way as well.